Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Welcome to another video on your channel Profit Equities. In this video, we'll be talking about 5 deep value stocks which are being currently bought by fund managers. Now friends, if you like the content that we produce on our channel, please don't forget to like this video, share these videos, and if you have not already subscribed to our channel, please click on the red subscribe button. This will help you get notified whenever we upload a new video. Also friends, we have recently created a free Telegram group for our YouTube channel subscribers. We'll be providing a link to the group in the description section. Please go ahead and click on it to join the group where you can be updated about stock market developments at the earliest. Please watch this video to know more about these stocks. Now the first company on the list is Larsen Toubro Limited, which is available at Rs 1304.20 and the face value for it is 2. The symbol for it is LT. Now Larsen Toubro Limited is an investment holding company which engages in technology, engineering, construction, manufacturing and financial activities. The company was founded by Henrik Holk Larsen and Soren Christian Toubro in 1938 and is headquartered in Mumbai, India. Now a fall of 7% in mid-December presented a good buying opportunity in India's largest construction company for value pickers. Analysts point the stock fell primarily due to slow pace of execution of its robust order book in states such as Andhra Pradesh and Maharashtra and reports of it missing its present fiscal's order inflow guidance due to the economic slowdown. These concerns analysts feel will be short-lived. Given its robust order book of over Rs 3 lakh crores, the company serves as a proxy to capital expenditure revival and hence the fund managers enhance the exposure to the company's stock. The stock has recently been bought by both HDFC Mutual Fund and Kotak Mutual Fund. Now looking at the 1-year chart, this company has not really created any major wealth for its shareholders and is almost closing the year at the same levels that it started it. The company is a large cap with a market capitalization of 1,83,055.08 crores. The EPS of 67.40 translates into a price to earnings ratio of 19.35, which is much more cheaper when compared with the industry price to earnings ratio of 27.73. The price to book ratio of 2.65, however, is slightly high. The company has a debt to equity of 1.8660, whereas the return on equity for this company is 0.1526. The dividend yield for the company stands at 1.38%. Now the second stock on the list is Crompton Greaves Consumer Electricals, which is available at Rs 254.20 and the face value for it is 2. The symbol for it is CROMPTON. Now Crompton Greaves Consumer Electricals Limited is a holding company which engages in the manufacture and distribution of consumer electrical products. It operates through the electrical consumer durables and lighting products business segments. The electrical consumer durables segment offers fans, pumps and appliances. The lighting products segment comprises of luminaries and light sources. Now fund managers find great value in this stock as firms in consumer electricals are expected to generate a 9% growth in revenue in the December quarter, which is a sharp rise after 12 quarters of low revenue growth of 6.8%. With the demand for water heaters and other water appliances very strong in rural areas, earning prospects will improve. The company is expected to record a 14% growth in its revenue for the quarter due to improving sales in November and in the early part of December. Its operating margins are expected to grow by 21 basis points to 12.4% in the quarter due to improvement in the demand in December. Now looking at the 1-year chart, this company has been on a slow uptrend even in the face of an adverse market. The company is a mid-cap with a market capitalization of 15,944.11 crores. The EPS of 7.23 translates into a price to earnings ratio of 35.16, which is slightly cheaper when compared with the industry price to earnings ratio of 44.91. The price to book ratio of 14.53, however, is much on the higher side. The company has a debt to equity of 0.1504, whereas the return on equity for this company is 0.4429. The company's dividend yield stands at 0.79%, whereas the promoter holding is on the lower side at 34.36%. A worrisome 48.85% of the promoter's holding is pledged. Now the third company on the list is BBL Bank Limited, which is available at Rs 343.80 and the face value for it is 10. The symbol for it is RBLBANK. Now RBL Bank Limited operates as a scheduled commercial bank. It operates through the following segments, which are corporate and institutional banking, commercial banking, branch and business banking, development banking and financial inclusion, and agribusiness banking. Now, the near halving of its share price from a high of rupees 700 has brought fund managers who believe that this is a value buying in the private bank space to the counter. The company has been recently bought by Aditya Birla Mutual Fund. The recent capital raise has improved the bank's shock absorption capacity, and its strong retail franchise in credit card and development banking, which is mainly micro banking, is attracting buyers. In the credit card business, RBL has increased its market share from 2.13% at the end of March 2018 to 4.26%. The bank's strategy of focusing on high margin retail business will help increase its net interest margins and profitability going forward. Now, the company is a mid-cap with a market capitalization of 17,474.52 crores. The EPS of 15.11 translates into a price to earnings ratio of 22.75, which is much cheaper when compared with the industry price to earnings ratio of 40.46. The price to book ratio of 1.67 is also very reasonable. The company has a debt to equity of 1.7925, whereas the dividend yield stands at 0.79%. Now, the next stock on the list is Bharti Airtel Limited, which is available at rupees 500.05, and the face value for it is 5. The symbol for it is BHARTIARTL. Now, Bharti Airtel Limited engages in the provision of telecommunications, tower infrastructure, and direct-to-home digital television services. It operates through the following segments, which are Mobile Services India, Mobile Services South Asia, Mobile Services Africa, Airtel Business, Tower Infrastructure Services, Home Services, Digital TV Services, and others. Now, with the telecom industry consolidating into three players, which are Bharti, Vodafone Idea, and RGO, the ability to raise tariffs has greatly increased. Analysts point out that all the telecom operators are witnessing strong data volume growth with increasing penetration of smartphones and improved availability of 3G and 4G services. The device and content ecosystem has also improved, leading to higher customer awareness, driving data volume growth. Fund managers believe heavy capex towards network improvement and capacity expansion to sustain heavy data usage among subscribers will bear fruits. Now, looking at the 1-year chart, this company has been on a beautiful uptrend, contrary to the expectations of many people who had expected this stock to underperform. The market cap of the company is 2,56,628.66 crores, which means that this company is a large cap one. The company is going through tough times, and hence the EPS and price to earnings ratio are not applicable on account of it not being profitable. The company is available at a price to book ratio of 2.38 times, which is slightly expensive. The company has a debt to equity of 1.5735, whereas the dividend yield stands at 0.50%. The promoter holding is a strong number at 62.70%, whereas none of the promoters' holding is pledged. Now, friends, please remember that the sword of telecom dues is still hanging on this company, and hence it might be prudent to stay safe while taking any buy or sell decisions in this company. This stock has recently been bought by ICICI Prudential and Axis Mutual Funds. Now, the last company on the list is Power Grid Corporation of India Limited, which is available at rupees 197.40, and the face value for it is 10. The symbol for it is POWERGRID. Now, Power Grid Corporation of India Limited is a holding company which engages in the transmission business. It operates through the following segments, which are transmission, telecom, and consultancy. The company was founded on October 23, 1989 and is headquartered in Gurgaon, India. A dividend yield of 4.5%, strong order book, and proven execution capabilities have attracted fund managers like HDFC Mutual Fund to the counter as they find huge margin of safety. The company's margins are set to improve, with the firm bagging 7 out of 13 projects under tender-based competitive bidding. Power Grid Corporation of India plans to raise up to rupees 10,000 crores through an infrastructure investment trust by carving out its projects under competitive bidding, which will help unlock value from its operational transmission assets and free up long-term capital for further investments. Now, looking at the 1-year chart, this company has generally been choppy. The market cap of the company is 1,03,271.58 crores, which means that this company is a large cap one. The EPS of 20.03 translates into a price to earnings ratio of 9.86, which is slightly cheaper when compared with the industry price to earnings ratio of 14.71. The price to book ratio of 1.75 is also not wildly expensive. The company has a debt to equity which is on the higher side at 2.1917, whereas the dividend yield is a strong number at above 4%. The promoter holding for the company is also above average at 55.37%, out of which nothing is pledged. Now, friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. Also friends, if you like the content that we produce on our channel, please don't forget to like this video, share these videos, and if you have not already subscribed to our channel, please click on the red subscribe button. This will help you get notified whenever we upload a new video. Thanks for watching and you have a great day ahead.